Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Simon Dixon of BnkToTheFuture.com. Simon, welcome back to the Keiser Report.
Thanks for having me back, Max.
All right, now, BnkToTheFuture.com has passed a milestone, 30 million funded. Tell us about it.
I think we've passed 35 million funded. So we're an online investment platform. We specialize in financial innovation and technology. We allow investors to invest in the future of finance, and it seems that there's a large appetite for people to invest in changing finance.
Yeah, what's great is that what you saw early with your book, Bank to the Future, and now with the BnkToTheFuture.com, is that fintech, as it's now called, was going to be radically transformed in the same way that the movie industry, the music industry, the software industry has been radically transformed by innovations in technology. The banks were resistant. Then came fintech, then came Bank to the Future, and you guys are, shooting the lights out, so to speak. Now, there was a big IPO of an Australian company. Interesting story. Tell us about it.
Yeah, so Bitcoin Group is a company that have been looking to float on the Australian stock market. Stock markets have a big history of IPOing gold mining stocks and oil mining stocks. But now we've got a Bitcoin mining stock. Due to the nature of Bitcoin mining, there was a lot of resistance from the Australian regulators, and they've been working on this for over a year. They got the IPO through. It's due to go live in November. And we did a block of the IPO through BnkToTheFuture.com. and raised several million just through people investing online.
Now, am I correct in saying this would be the first IPO of a Bitcoin company on a major exchange anywhere in the world?
This would be the first one that got through. So there was a couple of reverse mergers, and there was one in London that got pulled in the last second. But this is the first Bitcoin mining company that's got past that process and is due to float and trade on a stock market.
Now, Simon Dixon, it seems to me that Bitcoin itself is enjoying a bit of a renaissance because, as I see it, the excitement of a couple of years ago coincided with an enormous amount of underperforming exchanges and exchanges that didn't have the horsepower to really handle the volume. And so we had a tremendous volatility. Then we had a bit of a price contraction back down to a lower level, but a lot higher than where we were a few years ago. Then a wave came through. Blockchain. Blythe Masters, formerly of JP Morgan, with a new company about the blockchain. There's Blythe Masters on the cover of Bloomberg magazine, all about the blockchain, and kind of putting Bitcoin in the back seat. But now I think people are starting to realize that, wait a minute, this blockchain thing maybe is not so good, and they're coming back to Bitcoin. And we see that in the price action, don't we? Talk a little bit about this.
Yeah, so the markets always foresee the actual happenings. They always say the phrase is buy on the rumor, sell on the fact. What we're seeing right now is a resurgence of the Bitcoin price, and I believe, and the part of what's being factored into the price right now is that for most of 2015, everyone was talking about the blockchain and how the blockchain is going to change everything. And then the banks came around and said, yeah, we're going to use the blockchain and we're going to change everything using the blockchain. But what people are starting to realize right now, and I'm not sure if the market has fully realized it, but these things called private blockchains, where the banks have taken Bitcoin's technology and said, well, we can use that, is an inferior product to Bitcoin itself, because the two features that make Bitcoin such a valuable technology and a way of passing value all around the world very cheaply is the fact that it's secure, and its security is based upon the fact that hundreds of thousands of computers all around the world are auditing every transaction. The second feature of it is it can't actually be rigged. But if you take a private blockchain with a few banks sending things between each other, essentially you have a sophisticated Microsoft Excel spreadsheet. And people got very excited about that. And the reason they got excited about that is because the financial institutions that missed out on the true potential of Bitcoin came along and said, well, we don't like Bitcoin, we love the blockchain. And so everyone's trying to figure out what they can do with the blockchain. And I think a lot of people are going to realize it's a sophisticated Microsoft Excel spreadsheet. And actually, until you integrate it with Bitcoin, which is, the decentralized, audited transaction that requires no trust and can't be rigged, you actually realize that Bitcoin is where the value is.
Right. I think when this movement came around, it's the blockchain, we're going to create a private blockchain. There's a 9-bank consortium. We're going to share information on a private blockchain. It's just banks being banks. They are hoarding the technology, and they're using they're using the economies of scale for themselves. They're not going to pass the savings on to consumers. And it's not a decentralized, like Bitcoin is, a situation where you've got, as you point out, thousands of nodes or computers verifying these transactions. It all goes down to a centralized authority once again. And that's what the point of Bitcoin was, to get away from a centralized authority. So now people are beginning to realize that, wait a minute, Bitcoin is really the king of the jungle here. They're starting to put money back into Bitcoin. Bitcoin itself is now 90% of all the crypto space is just in Bitcoin. Once again, it's asserting itself as a leader. And the price is about where it would be had there not been a lot of the craziness we saw a year or two before. But let's talk now about Bitcoin Capital, because we started Bitcoin Capital as a way to get folks involved in Bitcoin and cryptocurrencies. And we raised $2 million on Bitcoin Capital, and it pays a daily dividend in Bitcoin to people who own Bitcoin Capital. You basically took it out on your exchange, Bank to the Future. And I think in a very short period of time, we're ready for the third leg of this, to raise the next million for Bitcoin Capital, another $1 million. But I think the appetite for this is going to be pretty strong, because people are realizing that, wait a minute, Blythe Masters and her blockchain are the devil.
Well, Bitcoin Capital has become a real easy way for people to invest in a way that they understand, and get involved in the Bitcoin ecosystem. The original concept that we came up with is, a traditional venture capital fund takes several years to mature just due to the nature of the product. You invest in a company, it takes 5 to 6 years before it's worth significantly more, and you can sell those shares through an exit event. What we did with Bitcoin Capital is we took 1/3 of those funds, and we invested it in the process we were talking about, verifying transactions and receiving new Bitcoins, called mining. And now the investors in Bitcoin Capital Tranche 1, the first $1 million we raised, are approaching getting 50% of the money that they originally invested back in returns. And they still have a great portfolio of some of the most up-and-coming and promising Bitcoin companies that we invested in about 6 months ago. So what it's actually done is we've used the power of programmable money to, in a traditional fund, you wait a year for your dividend. But with Bitcoin, why not take that dividend, pay it every single day, because you can automate the whole process?
Right. So just to walk through this a little bit. So if it were a traditional Wall Street type product and they're going to pay a dividend out every quarter, let's say, that goes out to all the shareholders. They've got to send it out in a way that they can verify that they are sending it out, but they can't do it using the economies of scale of a blockchain. Then they have to verify that all of these things were sent out. Then they have to deal with customer service for people who said they never got the dividend. They have to call up and find out, where's my dividend? So this becomes a pretty expensive process. So if you told them, hey, let's send one out every day, they'd be like, wait, we can't afford to send one out every day, because the infrastructure to do that would cost many, 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 many more times than the cost and the actual value of the dividend we're sending out. So you, being an entrepreneur, you're like, wait a minute. If the cost of doing a simultaneous transaction that's verified in real time by thousands of computers in a decentralized way is zero, why not just send everyone a dividend every single day?
And that's what we're doing. We're sending thousands of dividends every single day.
And the cost of doing that is what?
Well, it's all done on the blockchain.
Like nothing, zero, essentially.
We're paying our miners fee, which is, it's a few dollars to send those.
Okay, so then this is what Wall Street's freaking them out, because they realize that, wait a minute, an entrepreneur, one guy, can take us on with this incredible product and get a tremendous uptake, and this is what they're trying. But they came back with not accepting defeat by saying, Bitcoin rules us, there's only one. They come out with these blockchain-like pseudo chains that are inferior.
But there's also one very important element of it, is because if the investors want to audit us, they can simply go to the blockchain and they can see the transactions and they can check we're not fixing the system.
Exactly.
So not only is it a low-cost way for us to produce values and give investors their returns, it's a way of the investors ensuring our honesty which is the bit why the banks want to have a private blockchain, because the private blockchain takes away the element of having hundreds of thousands of auditors and the investors being able to ensure their honesty.
Right, the cost of compliance, as it's called, is enormous. And so this removes the need for compliance.
Yeah.
So when you have a huge bank like JP Morgan and you have a headcount of 20,000, 50,000, or 80,000, whatever that is, including lawyers and compliance and people who send out dividend checks, and you remove all that, then why would you pay Jamie Dimon $1 billion if all he's doing is flipping a switch and there's a blockchain that takes care of all that? Well, you wouldn't, would you?
No, and so now what we've seen just this year alone in Bank to the Future, we've seen IPOs giving allocations to the online investment platform. We've seen funds that are investing in the future of finance. We've seen dividends being paid out on a daily basis. Now, these are all the tasks that were traditionally had to be done and charge a huge premium to do by the investment bank. What are we going to see next year?
Yeah, I mean, what are we going to see next? I mean, in the banking sphere, everything's being blockchained out of existence or Bitcoined out of existence. So aside from mortgage lending and deposit protection, what's left, if that even? I mean, what?
Well, already another company we raised finance for this year that investors invested in was a company that's taken the mortgage market. The mortgage market, which traditionally is plagued by rising house prices, which is good for investors, but bad for first-time investors because they've got to have a huge deposit in order to get on. That's being crowded out by the banks, but it's now being crowded back in by technology. So in the future, what we're going to see with these crowdfunding platforms and blockchain is that people will be able to have fractions of an ownership of a property. And it can get on, a very early stage. And this is all coming through right now. This is happening. There's billions being invested in this way already.
So what do you see as the future for even venture capital? Because venture capital, it seems like Bank to the Future is cutting out the need for venture capital.
Well, Bitcoin Capital was our first fund using this new technology in order to administer a venture capital fund. And already the investors have received returns on a scale that they couldn't have received in any of their other venture capital investments. Still early days, things can still, this is high risk investing. But the combination of online investing with blockchains, and now you're seeing, NASDAQ, who are looking at investing in blockchain technology in order to administer their stock exchanges, is we're seeing the decentralization, inclusion on a scale we've never seen before. And we're seeing, real global markets for the first time here. And that is challenging for regulators because regulators were built upon geography and borders. Yet the online investment world, they don't think that way. They think of the internet wanting to invest in fintech.
All right, got to go. Simon Dixon, thanks for being on the Keiser Report.
Great to be here.
Is your DeLorean parked outside, by the way?
No, on the way, I think.
Okay. Well, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Simon Dixon of BnkToTheFuture.com. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.